What's good, guys? So today we'll be going over simply just my old trades, and not just my old trades, but my old demo trades. And the reason why we'll be going over just my win trades is to build some sort of confidence going into next week, because last week I kind of, not necessarily lost my confidence, but I just kind of, there were some points where I was just a little bit unsure of what to do. So, to rebuild back this confidence, ICT was saying just go during the weekend, look over what you did right, look over what you did right, and look over what you, when you did right, what you could have done better to have been right more times. Alright, so we'll be starting off with like our older trades from my last trading journal. It was like maybe like just this many trades. Not that many, but it is what it is. So we'll start at the very bottom. I'm only going through wins. And I did have a good amount of losses because this is pretty much the start of my trading journey where I'm still learning about, discipline and focus and all that good stuff. So I'm gonna go back to I didn't like this. Profit. Good trade, entered off higher, 5 trade, being inversed. So I'm guessing we got an inverse fair value gap, like right here. Shot up to this high. Tapped, we didn't, we have equal highs here, so we were gonna take that out. Still not in kill zone hours, but good trade. Tapping volume imbalance, shot up. Change state of delivery within. Could have held for longer probably, but for 1 to 4, that's 1 to 3, that's pretty good. I not risk a lot because I wanted to be safe, seeing that it was Monday with no news and being December. That's good. Hey, do you want to be? This is a great site. Even though we're completely focused on trading, you'll change as a person, and there's nothing greater to become a better version of yourself. Because trust me, if you look back and you're dying and you're sitting in the bed and it's the last moment, think about what you want. Think about what you want to think about yourself. If you have kids, think about how you think your kids should see you. How do you want to be seen by them? How do you want them to talk to you? And then compare it to what you're doing. If this is not matching, change it. Nobody else, then you can change it. Some guy on Twitter, but it's fire. Hey, valid. I have a lot of losses over here. So we get the manipulation. The manipulation was this. But that's nice of me. What did I enter off of? Fair value at breaker block right here. Breaker block entry would have been. This would have been the breaker block entry. Just saw they were pretty high up, due for retracement. That's not good. We shouldn't. I'm gonna go to my other trading account just because this one's a little bit. I was an amateur at this point, you know what I'm saying? So we're gonna start off with wins. Nice. So we tap into this fair value gap, close below it, tap into this order block. We're in probably a higher time frame order block right here. And then we inverse this, tap back in, enter, and drop. Not bad trade. A lot of these losses are just completely silly mistakes that could be avoided. I waited for 11 a.m. to hit, so PM session could start, then waited for some displacement to the downside, which in turn became an entry. At displacements, that was confluence, and I wanted to see if price would retrace back to the order block, change in state of delivery. Then I left, it did not come back, then I would not have entered, too risky. Price came back, I entered, put my stop loss down, and left the chart. I believe earlier that it was okay to take small losses being caught in the chart because I was going to catch a better move. So this was a good trade, break it, inverse this fair value gap. Just really after these trades, you have to get off the charts. You have to take your trade and get off. So price has been ranging up. We were due for a retracement. We get a liquidity sweep. Tap into this fair value gap, but we're selling down. We tap back in this breaker block in the first this fair value gap. I entered right here. We had the data low from news at 9:30 or from whatever at 9:30. exited simply below it. Not a bad trade. I stopped trading oil. It wasn't for me. Oh, this one's good. We tapped in this higher time frame. Fair value gap perfectly. Along with this inverse fair value gap. Tapped in this order block. Entered, sold to right here. And then bought them back right here. That's a good trade. Not the right time though. You should not be trading at that time. Especially not oil. So this is the market maker buy model. And we have the prior accumulation. We changed state of delivery here as we closed under this, but you know, nothing really happened. Took out this liquidity, went down, tapped into this fair value gap. So this actually now would be my entry, not my entry would not be here, 15,909 anymore. Oh, I guess this was a good one too. You waited for this balanced price range pretty much to be inverse, and once it was inversed, mounted off the down candle, then you had another this order block be formed, and then it be respected, and then you bought it back. But then once you sold above these highs and above the prior accumulation, you really need to focus on just getting off the charts. So that also comes back to sizing your positions accordingly. So you need to use a little bit more risk so that you're able to just get off the charts after it's done. But if you're just risking $100 on a trade on a $100,000 account, you're not going to get anywhere. You need to risk your 1%, like 1% at least. Alright, I looked at this one. It's a really good trade execution on oil. Notice price was going to lower, and we were in a nice trading range on the 15-minute. It started to be in a 5-minute downtrend, and entered when the price respected the inverse fair value gap. Price shot down, and the entry was nice. I exited once we reached 2.5 standard deviations. Let's see how this looks. So inverse this fair value gap on the 1 minute. And you sold. And it's go 1-to-1. Alright, not bad. Not that good either. Lots of oil trades. Alright, now this is kind of where a lot of maturity and growth happens. So we're looking at the wins now. So on the 1 hour chart, price clearly respecting bullish fair value gap, PD raise, which increased my conviction in price being bullish. Yesterday, price was due for some sort of move higher, in my opinion, and that was my bias. I did not want to short anything just long. I wanted to be at the start of the trend because I saw price respecting low time frame, bullish PD raise, creating an order block, and wicking into it was my entry. That's a lot of trades. I don't need to be trading this much. Okay, so what you're good at is you got this. This is a good trade. When you inverse this, you bought here, sold here, bought here, sold here. Get off the charts once that's done. Leave. Stop. You're done. You do not need to trade here. You definitely don't need to be trading here. Like you. 15, bro. Stop trading there. But good trade here. This is the proof that the sauce is the shit. I was bearish on NQ and we inversed the bullish fair value gap, so entered light. Let's see. But, so what this should look like if I did this nowadays is we got this liquidity sweep. We inverse this right here. We tapped back in. Entered 3 to 4 contracts. 2 to 4 contracts. That's it. Price shoots down. I'm off 2 contracts. My stop loss is now back here. We get stopped out. And then I'm done. And that was good. That was a good trade. See, you can still enter again, like right here. Because this is inversed. And once this is inversed, target this. Get out here. Like, just remember you can make each setup you take. To make each setup you take as high probability as you can. So we're just focusing on the highest probability, and taking a trade right after you just took a winning trade. Sorry to break it to you, buddy. It's not high probability. This is the Christmas one. This is a good one. So you have an inverse fair value up right here. During a retracement on the 5-minute chart, we close above it, tap back into it, along with this fair value up and this order block right here, with this imbalance that was tapped in, and then price shoots. That just keeps going. And we create this 15-minute fair value gap, price taps back in and takes out. The main liquidity pool was these equal highs right here. They were back and they were pretty obvious, and price wanted to wick them out. So this is where I kind of just started to really understand this. This trade was interesting, but it was not going along with the high time rise. There's a line in the lower time frame. Let's see. So the prior accumulation, the manipulation that takes out the liquidity that was engineered here. Now we're going to have a low resistance liquidity run that takes out of all of this. Low resistance liquidity. So as you can see, we're taking it out, and we have this 3-minute inversion at the accumulation. So what price actually does at the accumulation is it will either reverse or it will continue. So I entered, this price taps back in, and we created this change in state of delivery because I assumed that price would close below this 3-minute fair value gap. Once it did, we just shot down, and once it was here, you're done with the day because you positioned nicely so that this was a huge win. So you have to just be focusing on that, right? The trade was dropped a lot. We were in discount to do for a pullback of some kind. I noticed NQ took the low while ES did not show confluence to SMR. SMT is what it means. We inversed a smaller bullish fair value gap at the bottom of the leg, but I did not enter off that because it was less clean and didn't notice it. I used it as confluence for bullishness. The main reason it was equal highs we had though entered slightly before the inverse because I knew the equal high would be hit sometime. I exited a little late, which I could have been better at. Oh, I like this trade. I like this trade a lot actually. Even though it may seem a little iffy, but look, so we close above this 1-minute fair value gap. And we have these really obvious equal highs that price is going to take out. And once we close above, we wick back into consequent encroachment of that fair value gap, and you can see the SMT at the bottom. And once we have that, then I enter, and you should enter really heavy around here, or heavy within your discretion, because as you can see, it's a pretty confident trade. There's high confidence in this trade with SMT, SMR, and how we're in a deep discount. We're not showing displacement above the highs. This is showing me it's a high resistance liquidity run, meaning price is likely to be bearish. I was waiting for a bullish fair value gap to be inversed as always. We got a perfect inverse closing right under. We had a textbook change in state of delivery post inversion, which added confluence. I entered on an up candle and was targeting the next fair value gap hit right away. I think with this trade I was not as confident, even though I should be. That's it. Oh, so this is the one after. So I bought here, I sold here. And I was not looking for displacement, or I mean, if I was looking for price to go higher, I was going to be looking for us to break these highs with a fair value gap with some displacement, not like this. So this is now showing me that we have SMT as well with ES right here, I think I said. So once we close below this fair value gap, we have another change in state of delivery that you can almost sort of assume. And then price shot down. But with this trade, what you were not doing is you were not as confident. Yes, price shot back up to your break-even point, but like it never took out the top of this inverse fair value gap. And imagine you would have been eating, but that just comes with confidence. Alright, so we're going to look at some trades from this week now. So this week I think something I'm going to go over my oh, this was a good trade too, yeah. So SMT at the top, we'd been ranging, we're in a deep premium. And we inverse this fair value gap and we have a change in state of delivery. I enter once we are tapping back in this because these wicks show me price is able to reach down in here. Oh yeah, we're gonna go lower. Oh, trust me, we're gonna go lower. Especially with this big manipulationary leg from here to here. So we have 2 to 2.5 standard deviations, which is your target. So I entered off the, so I was changing to delivery, entered off this fair value gap being here. We created this order block, which gave me more confluence, and we just kept shutting down. One contract taken off, stop us to break even. Technically, it should have been here. it should have been. Actually, here was good. You did good on that trade. That was a good trade. Alright. Yeah. I'm gonna post the next video next.